Welcome to the Geeks of the Valley podcast, your gateway to insightful conversations with the brightest minds shaping today's industries on a global scale. Join us as we delve into the hottest upcoming trends and explore how their work is influencing the global economy. Our podcast focuses on four distinct industry sectors, bringing you discussions from the forefront of venture capital and private equity, innovative minds, entrepreneurship, and policy and multilaterals. What initially began as a casual coffee chat has now evolved into a thriving global platform for visionaries, where ideas are shared and connections are made. We genuinely value your input and eagerly await your suggestions for future guests. If there's a particular individual you're eager to hear from, don't hesitate to reach out to us at geeks@geeksofthevalley.com. Tune in and join us on this exciting journey of knowledge, inspiration, and innovation. This morning, we have John Patrick Mullen, a Hong Kong-based entrepreneur and builder in the crypto space, joining us. He is the CEO and co-founder of Mantra and Soma Finance, innovative ventures focused on DeFi, blockchain tech, and digital assets. With over 10 years of experience in crypto, John's journey began during his international business studies at SLU Madrid, where he discovered Bitcoin. He later pursued a dual master's degree in management and economics from European Business School and Tongji University. John's banking career and role as a research analyst exposed him to blockchain and fintech. He built a fintech community in Shanghai, then co-founded a crypto exchange project in Hong Kong, solidifying his passion for entrepreneurship and leading talented teams. Currently, John leads Mantra, a layer 1 blockchain for RWA tokenization in Soma Finance, a US-regulated DeFi app. He has raised significant funding and shared his expertise at prestigious universities worldwide. Join us as we explore John's insights and experiences as a crypto entrepreneur. Let's dive into the conversation and learn from his expertise. John, thank you so much for joining us today. How are things in Hong Kong with you this morning?
Things are good. I was actually just getting back in town. Been traveling a lot this year. It's been pretty busy, but good to be back home and in town consecutively for the next two-ish weeks, which is a record for the year so far.
Well, exciting to have you back, and let's jump into the first question here, shall we?
Sounds like a plan.
So, John, can you provide some background about yourself and explain what you're currently building at Mantra?
Yeah, absolutely. So I got into the Web3 crypto space fairly early on in my adult life, I would say. So bought my first Bitcoin back in 2013. This had been after I'd moved over to Europe for school. I'm originally from the US and was living in Spain in Madrid, studying international business. I had a buddy who was a computer science major, Trey Tomlinson, shout out to Trey, who got me into Bitcoin back in 2013, so pretty early on. That has kind of really changed, that moment has really changed my life, I'd say. Since then, I've moved around the world. I've lived in Brussels and Germany and outside of Frankfurt, mainly for school. Then I moved over to Asia, primarily initially for school, and then for work, following a bit more of a traditional kind of career path in investment banking at first, but very quickly found out that really wasn't what I wanted to do with my life, and I kind of went full down the crypto rabbit hole in 2016. Ended up quitting my job at the bank in 2017, and moved on to Hong Kong at the end of that year. Have since worked, basically across the spectrum of the crypto space, in centralized exchange business, brokerage. I've been building Mantra for the last 4 years, which initially started as a DeFi platform, has morphed into a much broader range of products, but primarily focused on our layer 1 blockchain for real world asset tokenization. So it's been a hell of a journey. And it's been an immense honor and pleasure to kind of build and work with the people I have over the years. But yeah, I mean, I really feel like we're just getting warmed up.
And speaking of Mantra, what is the core concept behind it, and how does it differentiate itself in the market?
Sure. So I think it's important to understand kind of the way that we got to where we're at today, and that started by basically building a decentralized finance or DeFi platform with this like DAO or like decentralized autonomous organization structure that was meant to be a community run kind of like financial platform or financial like um, kind of conduit for retail users to invest, trade, buy different types of tokenized products, etc., stake their assets, however you want to call it. And we had some good success with that. But over the kind of evolution of the space from being a very early builder in the DeFi summer days of 2020 to where we're at now, we saw a lot of issues with regulation. We saw a lot of issues with kind of like scams and issues in the industry when it comes to building things that are on chain. So we have effectively set out to build a protocol and an application that sits on top of that protocol that supports safe, easy, and accessible use of on-chain products and assets. So we've built a purpose-built blockchain, layer one blockchain solution that supports assets to be brought on-chain, real-world assets, whether that's real estate or different types of financial products, collectibles or other types of alternative assets, IP or other things. We want to have a technological stack that supports that asset tokenization. And then we are also building an on-chain regulated exchange product that supports the trading, distribution, and kind of general interaction with the retail public of said assets in a safe, secure, on-chain way.
And congratulations on securing, your $11 million funding from Shrook Partners in the Middle East. What makes the Middle East market particularly interesting for Mantra, and why jump out there?
Yeah, so I think it's a little bit more about a few things. I think one, from a Web3 angle, the Middle East, Dubai in particular, has become a really strong hub for the space. I think we were recently there for Token 2049, which was a massive crypto event, which was sold out even with the crazy weather that happened in Dubai, where there's like biblical flooding and rain. But aside from that, it's become a really big hub for crypto adoption. There's governmental support at the highest levels. There's a regulatory regime that supports people to come build in a safe, compliant, and transparent way. And even more than that, there's also just ample amounts of capital that is comfortable with investing in the space. And kind of back to my story where, I'm American, I've been in Asia for a long time, going on 7-8 years in Hong Kong, nearly a decade in Asia in general. My entire entrepreneurial career has been out here. That being said, when you go to Asian-based investors, honestly, I don't really fit the bill. I'm not local, and they're probably going to be more comfortable with someone who is. But when I was talking to American investors, whether that be in New York or Silicon Valley or whatsoever have you, I'm also not there, right? So I was kind of in this no man's land as a founder. And it's funny because I don't want to say I wasn't accepted. I just was a challenge. And it was kind of like how my life has always developed, which is just I've always followed my own path and had a little bit of a non-traditional route. I ended up in the Middle East, and that's who accepted me, and that's who kind of backed me and supported me. And I think it's just been a perfect synergy of what we're building, the technology advancing to where it is, the support the region has, and the belief in a very long-term minded investor like Shrook, who really will and is a value-added partner to what we're building, and brings us that credibility that is of the highest quality, given who their LPs are and who their supporters are. So it's been a match made in heaven so far, and I'm really excited that we're able to work together.
And as a founder at Mantra, what were some of the challenges you faced during the building process?
Too many to name, my God. Regulatory challenges, money challenges, team challenges. I mean, we had to restructure the team, we had to lay people off, we had to, I had to basically take no salary for God knows how long. Financial stress, lacking product market fit, lacking clear synergies with, partners and, all kinds of things. I mean, like it's funny. I talked to some of my team about this. I feel like 2020, halfway through 2022 and a lot of 2023 was basically going through every challenge that you can see a CEO go through. I felt like it, at least, right? Maybe not every, but there are so many different things: legal, financial, regulatory, co-founder, team. I mean, people. Like there were so many challenges that it felt like it was all happening, in one calendar year. I'm like, I feel like I'm going through just what some CEOs in non Web3 industries would go through in like a lifetime in some cases, or just in general, right? Obviously, it's a bit tongue in cheek, but it was a lot. It was immense. Um, so I think from my side, it's been very critical to find conviction in myself, and conviction in what our mission is and what we're building, that it was all going to be okay in the long run. And honestly, I mean, we know each other for a while, right? So, this isn't my first rodeo from that perspective. I've been, whether this is lucky or not lucky, I've had like, you know, ups and downs in a lot of different ways, in a very short period of time in my like young professional life, as an entrepreneur and whatever. So like that's kind of made me who I am today as a person, as a founder, as a leader. And I wouldn't change it for the world, but frankly, some of those times were really, really, really hard. Really, really hard. I say this a lot, like I will, whether to a fault or not, like I'm impossibly and forever long John. I'll always bet on myself, and anything that I'm working on, because I know what I will do to achieve it, frankly. But that doesn't mean that it was easy. I will say that it's been a pretty critically important, part of my development to do some of the executive coaching work that I did, or do, I should say. So I work with different CEO coaches, some more on the interpersonal and like touchy feely side of relationships, and building teams and leading teams, and then some of it a little bit more operational. But all of it's been extremely supportive of my development. And I think particularly the coaching that I do with Celine, who's my like CEO coach at Mashari Method, has been I mean, legitimately life changing. Like I love that woman. She in the Mashari Method, which is this kind of CEO like training methodology, has been something that when I started until now, it's been like a life changing experience, and it's really allowed me to kind of like have a mental unlock that, frankly, I know I'm put on earth to do the job that I do. And the job that I do, I don't mean necessarily even build mantra, but just to be a founder, a leader, a CEO, an executive, however you want to call it. That's like I was built for this.
And what is it about that method? It's you said the Mashari method. Is that what you call it?
That's exactly right. So Matt Mashari is the founder of the Mashari Method. He's like the CEO coach in Silicon Valley. So some of his additional clients are Brian Armstrong from Coinbase, Sam Altman, Ryan Peterson from Flexport. They basically only coach tech CEOs and venture capital partners, including at the likes of Kleiner Perkins and Sequoia and Benchmark and other major Silicon Valley VCs. So they work with a really, really top tier clientele base, which I'm fortunate to be a part of. It's not cheap, but the program that they use to support kind of like running and managing businesses as a CEO is the gold standard, in my opinion.
And on the back of this, when it comes to, you struggled as an entrepreneur, it hasn't been easy for you. Could you share any recommendations or key points of advice that you have for aspiring founders? I mean, if you were to look back at your life and the struggles you've gone through as a founder, would you do it again? And what advice would you give, aspiring founders out there in a sense?
Great question. I mean, I for sure would do it again. Like this is my life's mission, I think, my life's joy. Um, Obviously, the second time you do it, you just like it doesn't make it any easier. Frankly, you just can skip a lot of steps because you don't have to worry about a lot of the bullshit. um, but in terms of like tips, I would say you have to find a way to. Well, you got to find what you love to do, and I know that's a like kind of like like a cliche thing to say, but honestly, like if you're going to found a company and you're the CEO, you need to think about what are the four types of roles and responsibility a CEO has, or the archetypes that they have. And I say that there's four archetypes of a CEO. There's the, product visionary. They're super detailed in the product and they just want to focus on creating interesting products, delivering to the clients and users, creating value that way. There's like the marketing guru, the marketing master, I should say, like the guy who just can sell, and has great go-to-market strategies, super solid in that direction. There's the fundraising expert, and then there's like the general, the leader, right? And many people who found companies like to do one or two of those things. They don't like to do all of those things. So what I found that's been really good for me, although I actually like all four of those things, to be honest, is is optimize your life for what you like to do in your job or in your role. And if you don't like to do it, immediately get rid of that, or find someone else to do it for you, or find a path towards finding some way to get it off your plate, because it'll make you very unhappy. And frankly speaking, if you're going to be founding a company, you're going to be working incredibly long hours. It's going to be insanely stressful. There's so many different things that are going to go wrong all the time. You're just on an emotional roller coaster, day in and day out. So like you should optimize around finding at least something in your work that you like, and try to get rid of the shit that you don't. So that would be my general piece. And then obviously like the other stuff that's a little bit more standard, like make sure you, value your health. And I would say that's both your physical and your mental health, and take that into consideration from day one, because that's a very hard thing to get back if it goes too far.
As you alluded to earlier in the call, it's not easy being a founder, but especially being a founder in the Web3 space versus the traditional industry sectors, especially when it comes to raising money. And when looking at, I guess, because you're not just considering an equity raise, but also a token raise, could you elaborate as to what the factors are that investors look at when determining valuation, or when founders look at aspects such as these?
Sure. I mean, it's just a totally different, you have totally different investors to look at this stuff, right? So like when we're approaching investors to look at the equity, they have a different risk reward profile. They are looking for different things in terms of governance, different requirements. They might require things like audited financials. They're going to look at obviously the business revenue rather than like tokenomics. So there's a lot of different elements that, are different between, when you're raising from the equity stack or from the token stack of the capital stack in general, right? So the good thing about Mantra is we can support both. We obviously focus heavily on optimizing across both of those elements, but also making sure that there's alignment so that investors feel like they're, not just getting one or the other. When it comes to equity, it's a little bit more like, are you a venture backable business? Which means at whatever stage of growth you're at, are you being underwritten for whatever, multiple return is required? So like if you're an early stage company, the investor needs to think that you have the possibility for 100x. Like if you don't even have that to begin with, because your business is a bottle manufacturer, like that's probably not a venture backable business. So it's a very different model. Doesn't mean it can't be a great business. It could be a great investment, honestly, but it doesn't necessarily need to be a VC backable business. So these things are just different from that perspective as an equity investor. When it comes to tokens, again, it's a totally different thing again. They're looking for very different things, like the tokenomic model, like what is the lockup period on the tokens? What are they buying in at? Are there comparables? Is there a discount? Does the token trade? Is it going to be on an exchange? The liquidity profile of the token, if it's on an exchange. It's a very different thing in terms of like the time horizon that you're investing in. So they underwrite at different return multiples. So I've had experience raising in both elements. We're in the process of raising actually at the token level. So, it's a very different game. I actually like the fact that we can kind of play with both sides, equity and tokens, because you have different conversations. You have a different style of pitching. You have a different questions being asked, different investors that you're talking to. So it's an enjoyable process for me. That's why I said I actually really do I like the fundraising process because it also requires you to really think on your feet, meet interesting, smart people in many cases. Not that everyone's smart and not that everyone's nice, but the vast majority of funds that I've talked to, which is many, 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 have been enjoyable conversations for the most part. And it requires you to really think hard about your business, which I think is a good thing.
So John, when it comes to the token valuation and how it differs from the equity valuation as a startup founder, how do you, I guess, manage the difference between the two, given that one is more a private valuation versus a public one?
So honestly, I don't really think it matters if there's a difference. Where we raise our equity round at is miles different than what we're currently raising at from a token perspective. And that's okay because it's different investor base. They have a different return. They're underwriting for a different return. And the liquidity, like the liquidity profile is just different. So I don't think it's a problem. I mean, they don't need to necessarily be in unison. What I think you need to have in unison is that you're not going to effectively push all value towards one versus the other. So you need to have alignment of the equity and the token investors. And how we've done that for Mantra and our token, which is the Ohm token, is that when investors invested into our group structure, they also had a warrant or effectively an opportunity to buy the token, as well as they got vested tokens that are long-term vested, over years. So not only that, but Mantra, let's just call it our Mantra group, for example, it also has Ohm tokens or our token on its balance sheet and has a long-term alignment on these tokens going up in value. So the Mantra group and the Mantra token have a value linkage that I think investors can see so that an equity investor doesn't think, hey, I'm going to invest in the equity, but then this founder is going to take the money and only drive it into the token. That's an important thing. It doesn't matter the valuation and if they're the same or different. It just matters to make sure that the investors feel like they're not getting hosed on one or the other, because I think that's happened a lot where investors invested into equity and then everything went into the token, and then the founders just forgot the value of the equity because they'd cashed out everything in the token. That's not something that we can do. So I think it's more about alignment rather than disparity in valuation or price.
So when it comes to, I guess you would say path exit, one is through that token valuation where it's like higher liquidity opportunity, so you can maybe exit quickly from that perspective if you choose to, or you can properly see a company through IPO from the equity perspective. Would that be correct?
Yeah, or some other liquidity event, right? Like, the equity investors are seeing, they're underwriting as a VC, like an early stage VC in the case of when we did our raise, right? They want to see Mantra go from whatever valuation they invested at to a unicorn or more, and then hopefully either get acquired, IPO, or some other liquidity event. In my mind, Mantra, the group would like the path towards an eventual exit would be IPO. Where that would happen, I don't know. We'll see. That's not happening anytime soon, but we're working towards that goal. On the token side, we're listed on multiple large centralized exchanges, including Binance and other majors, and we'll be listed on other additional majors in the not too distant future. And obviously, with liquid markets, Ohm, which is our native token, is effectively as good as cash. And like people would sell their tokens, or whether they're selling them on the open market or selling them, via discounted like OTCs or whatever. That's kind of how investors would see their path to exit. From a user, or sorry, not even a user, from a team founder perspective, like the exit is effectively you get an allocation of your token that eventually you could sell for cash if you so choose. But obviously that needs to be aligned. It needs to be public. It needs to be transparent, and need to make sure that the community understands what you're doing with it.
And speaking of, I guess, being transparent and community alignment, from your perspective, at some point there's a lot of AMAs that you're doing. How do you manage, I guess, the risk as well as the communication with a lot of people who are holders of your token when maybe the token is doing well or not doing so well?
Yeah, I mean, I think it's funny because when you launch a token, you're effectively going public. You're going public to a slightly different audience, And in many cases, this audience is global. In many cases, audience is, not very sophisticated in their investment, process and due diligence and whatnot. Um, and many times they're going to buy the top and sell the bottom, and they're going to be mad about it. So honestly, you have to have a very, very thick skin, because you're going to get called a lot of names, and you're going to be called a scammer the minute the token goes down, even if it has nothing to do with you. And you could have done nothing to stop it. But you just kind of got to be prepared for that eventuality and understand that this is just how the game works. And then at the same time, I think it's critically important um, to always be there and take the responsibility when things don't go right, and do whatever you can to make it right. So like having that kind of fiduciary responsibility and integrity to your community is critically important if you want to launch a token, because if not, you're going to get ripped to shreds. So I would just my word of advice to anyone looking to launch a token is, the minute you launch a token in the public, your name is going to be all over it forever. And if you don't have that ability to, you know, not just use this as a quick win financially for yourself, but you want to make sure that you create something valuable for the community over the long term, and you have this long-term mindset, then I would highly suggest you not to do it, because it will stick with you forever. And it's just not the right thing to do.
Well said, John. Well said. And really, to wrap up our last question for the call today, what piece of advice would you give, yourself 10 years ago that you wish you knew, that you know now, but you wish you knew 10 years ago?
Buy a lot more Bitcoin and hold it. No, I'm just kidding. As a founder, I would say, I honestly, like, thinking back, yeah, there's a lot of stuff that I would do different, but I'm pretty happy and pretty proud of, like, the fact that I honestly, like, I went almost straight out of school. I mean, I worked in a bank for like 18 months, and then I went and just drove straight into it, and I had no clue what I was doing. And I figured out a lot of shit along the way, made a lot of mistakes. I continue to make mistakes in business, in life. I think in business, I'm pretty good at not making the same mistake twice. Can't say the same about my life. Well, working on it. But in general, go for it, go hard, go all in, do it when you're young. You have so much ahead. And honestly, stick to it, because good things take time. I mean, we've been building Mantra for 4 years. We've had many ups and downs. Um, I'm sure there's going to be many more challenges ahead, many more, perilous situations that we're going to have to work through. But frankly, that's one of the joys of it. If I could say anything, because I think that was just, maybe, I don't know if that's a little bit of a cop-out answer, but if I could say anything, I would say, very early on, focus on building the culture in the organization that you want to operate under. Surround yourself with people that you like to work with, that you respect, and that will push you to be a better founder, CEO, whatever your position is. And value your time, and value your health, mental and physical. Those are a lot of things that I did not do when I was younger. I'm still pretty young, but I'm working on those all significantly. And I think that does help to give you the longevity that you need, because you never know how long it's going to take. And that's been an important part of my journey, which was just continuing to push, continuing to try new things until it worked out, and not getting too discouraged when it wasn't.
John, thank you so much for joining us today on Geeks of the Valley, and it was a true pleasure having you on today with us.
Absolutely, my pleasure. Thank you so much for having me. It was a very interesting discussion, and hopefully it was valuable for the end user and listener. And if you're interested in learning more about what we're building at Mantra, come check us out. Hit me up on LinkedIn, WhatsApp, or Telegram, Twitter, whatever, and I'm pretty available. So I appreciate the time, and thanks again.